71% of Americans with a 401k are invested in something called a target date fund. And I think they are often the wrong choice for somebody getting close to retirement. So, why are they the default option in 84% of 401k plans? Well, in the next 90 seconds, I'll break down how these work, why they're everywhere, and why yours might be creating a problem for your retirement. A target date fund is a set it and forget it investment. You pick your expected retirement year, say 2045, and the fund does the rest. Early on, it holds mostly stocks for growth. As that year gets closer, it automatically shifts towards bonds and more conservative investments. The idea is simple. The further you are from retirement, the more risk you can handle. The closer that retirement gets, the more the fund protects what you've already built. It's automatic, it's diversified, and for a lot of people, it's a genuinely solid starting point. They're popular because they're the default. Most 401k plans automatically enroll you into one, which means if you've never actively chosen an investment, there's a very good chance this is what you own. They're low cost, broadly diversified, and require zero decisions from the investor. For someone who just wants their money working without having to think about it, that's a real feature. Here's where it gets interesting. Target date funds can be a great, inexpensive way to get diversified growth when retirement is decades away. But as you get closer to that finish line, you enter what I call the fragile decade. That's the 10 or so years surrounding your retirement date when your financial plan is most vulnerable to disruption. It's during this window that the funds start shifting away from growth assets and into bonds. And here's the critical part. It does that based on a mandate written years ago. It's not based on current market conditions. It's not based on the best opportunities available today. And it doesn't check in with you first to ask whether your plans have changed. That means that the fund could be locking in losses and getting more conservative at the exact moment the market is offering opportunity, or at a time when your situation calls for something completely different. Now, this isn't meant to scare anyone. Target date funds serve a real purpose, but it's worth understanding that a reallocation strategy is being executed on your behalf automatically without accounting for specific market conditions or your specific circumstances. If you're within 10 years of retirement and you're sitting on a target date fund, that's worth a conversation. Send me a message or follow the links below to book a time to talk, and I'm happy to take a look at what you're actually invested in. I'm Dr. Brock with Kimball Creek Partners, and until next time, make it meaningful.